Hey everyone, and welcome to Future Fortune. Today, we're diving into the world of banking and exploring some eye-opening truths that financial institutions might not be eager to share. Let's face it, banks play a crucial role in our financial lives. They keep our money safer than that shoebox under your bed or hole in the garden, providing access to loans and offer convenient ways to manage our finances. But what if I told you there's more to the story? Throughout this video, we'll uncover some surprising truths about your money that banks might not want you to know. By the end, you'll be armed with valuable knowledge to make informed decisions and take control of your financial future. So, get ready to break free from the financial blindfold. We've all heard the saying, "A penny saved is a penny earned." But what if that penny loses its buying power over time? Many believe that banks are the safest havens for their hard-earned money, yet they're unaware of the invisible erosion happening to their savings annually. This issue isn't about the fees deducted for transactions or the fear of theft. It's about inflation. That's the sneaky reality of inflation. Inflation is the gradual increase in prices of goods and services. While it might seem harmless, it silently chips away at the value of your money in the bank. Here's the shocker. Most traditional savings accounts offer interest rates that barely keep pace with inflation. This means even though your account balance might show a slight increase, your money's actual purchasing power is diminishing. Imagine this. You put $1,000 in a savings account with a 0.5% interest rate, but with an inflation rate of 2%, your $1,000 is actually losing $1.50 in buying power every year. So, what can you do? Explore alternative options like high-yield savings accounts or investments that potentially offer returns that outpace inflation. Remember, a stagnant savings account might be safe for your money, but it's not necessarily helping it grow. Banks make money in a multitude of ways. Those ways can be a bit sneaky. Here's the thing. Banks often charge a variety of fees, from monthly maintenance charges to overdraft penalties. These fees might seem insignificant on their own, but they can add up quickly, silently draining your hard-earned cash. Let's talk about overdraft fees. Imagine forgetting to check your balance before swiping your debit card. Suddenly, you're hit with a hefty fee for exceeding your account limit. These fees can be real budget busters. The good news? You have options. Many banks offer fee-free checking accounts if you meet certain requirements. Additionally, some banks are more transparent about their fees, allowing you to compare and choose the best option for your needs. Remember, knowledge is power. By understanding and comparing bank fees, you can make informed decisions to keep more of your money in your pocket. Banks profit from your card transactions in two main ways. Firstly, every time you use your credit or debit card, the bank earns through processing fees. This might not be immediately obvious since the deduction from your account reflects only the purchase amount. However, these fees are paid by the merchants, who often adjust their pricing to compensate for this loss, indirectly passing the cost on to you. For example, imagine you buy an item for $500 using your card. If the merchant faces a 3% fee for card transactions, $15 of your payment ends up with the bank merely for providing payment processing services. To avoid a hit to their profits, merchants might mark up goods, leading to you indirectly paying those transaction fees. Secondly, credit cards are a significant revenue source for banks, thanks to the high interest rates charged on balances. Banks lure customers with various perks to sign up for credit cards, not always making it clear that interest rates can skyrocket with little notice. The typical interest rate might start at, say, 17%, but banks can hike this to 18% or 19% after giving you a 15 to 30-day heads up, often in dense legalistic letters many overlook. If you don't diligently pay off your credit card balance, compounded interest can ensnare you in a financially precarious situation. While credit cards offer undeniable convenience and have become integral to our daily transactions, it's crucial to use them wisely to avoid accumulating debt. Ensuring you clear your balance monthly is a safe practice to maintain financial health and avoid the pitfalls of credit card debt. We often think of our bank accounts as secure vaults holding our cash, but the reality is a bit more complex. The money you deposit isn't always sitting there physically, ready for when you need it, just existing as digital numbers, as most of it has already been given out as loans and mortgages. Essentially, while your balance sheet reflects a certain sum, your actual money is at work elsewhere, earning profits for the bank. This system, called fractional reserve banking, means that while you can usually access your money whenever you want, there's a scenario where things might get tricky. One such scenario was thrust into the spotlight, revealing the secret of just how little cash banks hold amidst the financial downturn of 2008, when a widespread panic led people to attempt withdrawing their funds all at once, only to find that banks couldn't dispense the physical cash to everyone. Despite this, your money is still relatively safe. Most countries have deposit insurance programs that protect your money in case of a bank failure. Additionally, responsible banks maintain healthy reserve levels to handle most withdrawal requests. We upload insightful videos every week to empower you with the knowledge you need to navigate the ever-changing world of finance. Before we dive deeper, hit that like button and subscribe to the Future Fortune channel. Now let's keep exploring those banking truths. The friendly rapport you share with bankers may not be as genuine as you think. It's easy to be swayed into believing they're on your side, with their personalized greetings and warm, engaging conversations. This illusion of friendship cleverly masks their true agenda. A banking secret that they'd rather you didn't know is that these actions are part of a strategic effort to gain your trust, positioning themselves as your advocate rather than the bank's. Their ultimate goal often involves persuading you to agree to financial products, like loans or lines of credit, that weren't initially in your plan. Imagine being encouraged to take on a $10,000 or $15,000 loan you hadn't anticipated. This scenario plays out when what appears as genuine concern is actually a pursuit of financial targets set by their superiors. Failing to hit these numbers can lead to job loss, a harsh reality which leads those who prioritized ethical dealings and genuine care over sales targets forced out of their positions. The key to a successful banking relationship is clear communication and informed decision-making. Here's how to navigate it effectively. Be clear about your needs. Before you meet with a banker, consider your own financial goals and what you're looking for. Research different loan options and interest rates beforehand. This will help you have a focused conversation and avoid feeling pressured. Ask questions. Don't hesitate to ask questions about any loan terms you don't understand. A good banker will be happy to clarify details and ensure you're comfortable with the product. Don't feel obligated. Remember, you're in control. If a loan doesn't fit your needs, politely decline and explore other options. There's no pressure to accept every offer presented. By understanding the banker's role and prioritizing your own financial well-being, you can build a strong banking relationship that supports your financial journey. Traveling the world is an amazing experience, but unexpected costs can put a damper on your trip. One hidden cost to be aware of is foreign transaction fees. The truth here being that this is a detail often left undisclosed by financial institutions. Banks tend to keep quiet about these charges, knowing that informed customers might look for alternative banking solutions with more favorable terms for international transactions. This is why you hear so many stories of a small souvenir into a surprisingly expensive purchase when they check their statement back home. The good news? Not all cards charge foreign transaction fees. Some credit card companies offer travel rewards programs that waive these fees entirely. By researching different options and choosing a travel-friendly card, you can avoid these surprise charges and focus on enjoying your adventures. The final truth is just how much the banks are watching, both your account and your money. Your financial transactions are under constant surveillance. This measure aims to prevent illicit activities, such as money laundering, and to flag in cases that might require an audit by the IRS, where they determine whether taxes were duly paid on these funds and whether the transactions were conducted in accordance with the law. Therefore, it's crucial to be mindful of how you manage your finances, as these activities are closely watched. This awareness should assist you in maintaining lawful financial practices, thereby avoiding potential legal complications. That's it for this round of busting bank myths. Remember, knowledge is power. especially when it comes to your hard-earned cash. So, let's keep the conversation going. Drop a comment below with any banking truths we missed from our list. And if this video helped you feel a little more financially fearless, consider giving this video a like. Don't forget to subscribe to Future Fortune for more content that equips you with the tools to build a brighter financial future. Together, we can conquer the world of finance, one video at a time.